Hi everyone. So I'll start off the seminar by giving an overview of IIA and an overview of the topic that's there for today and an introduction to Mr. Prasanna, who's our main speaker today. IIA's main aim as India's leading Insurtech association has been to nurture the Insurtech ecosystem since our formation. We are a not-for-profit and we proudly serve a community of 209 members, and each of them contribute their unique perspective and expertise to our collective vision. Our main objectives as part of IAA are to basically encourage collaborations between startups and the wider industry, including insurers, reinsurers, service providers, and investors. We help in assisting Indian insurtech firms in penetrating international markets. We facilitate connections between insurtech startups and industry experts, both locally and internationally. We serve as the impartial representative of the insurance and insurtech ecosystem in discussions with policymakers and regulators, aiming to promote progressive policies. We publish and showcase intellectual discourse on insurtech emerging from India, and we endorse initiatives that employ technology to enhance insurance penetration across India's diverse strata in a fair manner. So, to that end, we have collaborated with many entities, including the Institute of Actuaries of India, the National Insurance Academy, Gift City, and BIMTech. We also conducted many successful hackathon in conjunction with Marsh and the NIA. To facilitate our members' international growth, we've established over 10 alliances with global insurtech associations, including the Italian Insurtech Association, the Insurtech Australia, Insurtech London, and Insurtech Israel, and others. Coming to today's topic, we're going to delve into a topic which has stirred a tremendous amount of interest and discussions worldwide, which is around blockchain. It's an innovative mechanism that stands at the epicenter of financial technology, and blockchain is effectively poised to revolutionize the industry as we know it. Blockchain has been characterized by its key principles of decentralization, transparency, and immutability. And these three core pillars that blockchain stands for is has widely been dubbed as a catalyst for a new era in financial services. So it's not just merely about digital transactions; it's about setting a whole new level of digital trust. Some major examples include how blockchain has innovated across cross-border payments, which has been historically complex and slow and can be made transparent. And blockchain has effectively made it transparent and nearly instantaneous, thanks to the decentralized ledger technology. Smart contracts, another facet of blockchain, automate agreements in industries, and that has been effectively used in a lot of use cases across insurance and trade finance. And this has basically eliminated the need for manual oversight and verification, which has saved a lot of money for a lot of insurers. So we see the dawn of a new age in identity management with blockchain-based systems ensuring data security and prevention of identity theft, and that is a major concern for insurers, for example, in the cyber line of business. So a lot of use cases in blockchain come across in the insurtech space. And in today's seminar, we basically journey through these applications of blockchain and more, and we look at the potential that it has in the financial sector. Our speaker today, Mr. Prasanna Lohar, is a seasoned banker and a digital architect with over 23 years of experience in various industries. He's currently the CEO of Blockstack and the president of the India Blockchain Forum. Lohar has worked globally with banks, fintechs, and multinational companies promoting cutting edge technology, adoption, and innovation. So I give the stage to Mr. Lohar. Please, sir, you can start.
Aspects. We'll talk about the journey, how banking and finance was there and how it has moved towards so-called technology blockchain, various use cases. And there are many other aspects which I'll touch upon, which we can always discuss offline, which platform to choose, how to choose, other trilemma aspect like how do you achieve performance or how do you achieve security, scalability, centralization, decentralization, and so on. So I think if you go back in 1994, this gentleman said that banking is necessary, but not banks are not. Primarily around BFSI not. So attention for saying this is like banking will come out of the bank branches, so-called traditional bank branches. Can you imagine banking started back in 13th century? Again, regulated banking started in the around 16th 17th century, and since then we will always looked at a bank branch as an infrastructure, some physical branch where people will go deposit money, ask for balance, and to do financial transactions, so called withdraw money or cash or some lending support. It was always happen until 1993, where RBI internally at India announced that we can do banking or something like more of a transactional banking on internet, since internet has started coming in, right, in form of some IT or information technology, so on. So I think banking has moved on. So today we'll talk about landscape, rise of internet, and bank evolution, how, and slowly we'll touch upon how we are touching the blockchain industry revolution, which is typically around how do you have a better lifestyle, how do you have a better structure around corporates, governments. Initial three industry revolutions were always talking about empowering corporations, empowering governments, or empowering larger institutes. But industry 4.0, which is a digital, which is powered by internet, it always spoke about how they can empower people, how people can talk to each other, how people can do day-to-day transactions, how people will have a easy life while they are talking or transacting with the so-called corporates and government who were benefited out of the initial three revolutions, right? Now look at internet. Back in it was always there, but open internet since 1995 we have seen. Typically in Indian context also, internet came in 93 95. I think the way we see today every transaction, the way we are talking today, or the way we transact or communicate or send money or send data, we can't live away without internet. The way we carry mobile phone today, one or two mobile phones, and many other business applications, or your work applications, or your social applications, so called WhatsApp, or your entertainment applications, or your transport applications like Ola, Uber, or your food apps, right? I think that was something like a magical for anybody to predict back in 94. Your banking will move out of those bank branches, or even transactions will move out of those physical territory and will come to the mobile phones, right? So I think it's all because of internet. And what we have seen last 20 30 years, this evolution is supported by terminologies called web 1.0 or 2.0 or 3.0. So today we are in the era of a web 2.0, which is primarily backed up by mobile or apps on a cloud, and backed by 3G and 4G. So now many countries are blessed with the 5G, including India, and certainly we'll see the way we have seen in the back end. In 90s, we were happy with the PCs or desktop, so-called Fox Pro or so-called MS-DOS. Evolution has done it on a browser, so-called Netscape or Internet Explorer, and we have seen many more products coming in our life, so-called Bazi, Rediff Mail. That is the evolution we have seen, and primarily around interface, how we are talking to your services, how you are talking to your bank, or how you are processing that data back in the back offices, and how you are connecting interface with the data with some kind of a logic. So today your logic is all about apps backed by cloud or backed by managed data center, and your interfaces could be web or mobile apps. Tomorrow's interfaces are going to be something apart from mobile, could be AR, VR, or your devices could be your customers, and it will be always backed by a distributed database, so-called blockchain, right? So while we have seen RDBMS like Oracle and others, now these companies are also now exploring how they can adopt blockchain into their day-to-day databases. And more or less the way we have seen last 6 months or before that or after that, AI is becoming one of those powerful technology. Everybody want to be part of that, right? So today, while we are part of a Web 2.0, anybody ask you what is Web 3.0? Web 3.0 is a combination of many more technology stacks, including cloud, blockchain, AI, AR, VR, IoT, and so on, right? So 5G, when we talk about 5G, now 5G is helping us to move our intuitive experience, right? So with the facial, voice, and many more other areas we'll work upon. Now, if you go back, the banking, which was right, this is the first ATM in our life, came in 1967, or you can see those during World War II. We used to see the banking used to happen on the vans, or you have seen a lot of innovations, but also we have seen many more setbacks also for banking, like Lehman Brothers. It was one of those profitable bank in 2006, in England, and it has vanished. It has vanished in couple of years. While there was a lot of havoc or news around your financial ecosystem is going down, some people come up with a Bitcoin kind of a ecosystem, which is a cryptocurrency. One of the use of a blockchain, and primarily the attention bring this Bitcoin as a financial ecosystem. Can we do the peer-to-peer financial transactions? More or less, Bitcoin works well in today's scenarios also. It's been more than 10 15 years this is going on. And imagine, it works without any data center, and it works without any bank coming in between, and it works without any government also coming in between. While the traction of a Bitcoin to become a better financial ecosystem couldn't achieve because it was not well supported by a regulator, or it was not well supported by banks, or it was being started by some of those non regulated companies or people, right? But the traction or attention to bring the technology behind this ecosystem, so called Bitcoin, we can always see a blockchain technology which can create the same kind of impact with a better regulation and with the better guidelines in our current day-to-day BFSI industry. What the way we have seen many more impacts happen in a banking ecosystem with the demonetization or so-called Facebook, like a company sitting on almost one third population of the world. They said, let us create another financial ecosystem called as a Libra, right? So I think while they have announced many more things, it was a failure ahead of the regulation. While it was well supported by some countries, governments, and companies like Mastercard, Visa, which are prominent names in a financial ecosystem, this ecosystem has vanished recently. This is being sold to some private company by Facebook, while Facebook is attention is towards Meta, right? So I think there are a lot of such incidents happened during COVID. We have seen n number of opportunities to do digital transformation. Countries like El Salvador are saying that Bitcoin will be their legal tender, right? I think likewise there are many other countries like Estonia was about to get vanished from the map, but today Estonia has become a template for other countries like India or many others to say how blockchain can be adopted. In Estonia, it's like every there are more than 290 plus use cases are backed by Aadhaar like digital identity, and all of them are connected to the banking ecosystem, toll collection, your laws, and many other use cases by government banks are backed by this kind of a blockchain infrastructure. Dubai also trying for that. Apart from governments, these are risk taking banks, right? Morgan Stanley or CT or DBS, now they say that they want to utilize some kind of a crypto assets, right? To be one of those financial services to their customers. Or CT is working with one of those blockchain based companies called Consensus for modernizing commodity training. Or this is a consortium of started by JP Morgan along with the SBI holding DBS, with one company of JP Morgan called Oinex, to see how digital assets, right? So-called digital assets could be utilized for some kind of financial ecosystems, right? So it is backed by tokenization, which is one of the use case of a blockchain. Again, there are a lot of traction is happening in India. We have seen how Union Bank has announced adoption of a metaverse on top of one of those metaverse platform Sandbox, right? Likewise, there are many other banks, JP Morgans, or companies like Visa, Mastercard investing a lot around metaverse backed by blockchain. A lot of things are happening globally. Bank International Settlement, which is a global central bank regulator for a body around who decides and looks forward of what all innovations to be bring on for financial ecosystems or a better financial inclusion for the CBDC, right? Central Bank Digital Currency, which is the KRA of many countries, including India, recently announced CBDC. Some of those pilots. Bank International Settlement is working closely with the many more central banks to bring on better central bank digital currency. If you go back, and I think our moderator spoke about cross-border payment, right? Today cross-border payment is sitting on huge number of operations. But if you bring on cross-border payment backed by blockchain, the way we send money on UPI instantaneously, and I think CBDC is another method to or a digital currency which will follow another infrastructure backed by blockchain, where advantages of for customer, that instant payment across the world anywhere, as well as in the back end there is a huge settlement kind of a process that will be wiped out. Imagine, go back in this slide where there is no settlement kind of a process for a bitcoin or a libra. Now imagine if I bring on central bank digital currency, which is also doesn't carry any settlement kind of a process. You will see how much we will save as a one bank, two bank, or as a regulator, or as a whole world. Many more countries will start adopting CBDCs. That's the traction we'll build on. So I think India also announced their RBI concept note on a CBDC, and there is a lot of acceleration which is happening on a blockchain or a CBDC kind of use cases in Indian context also. I think we'll find out how the way we have seen money has changed from bartering to gold to card to electronic money. I think digital assets also should be, or maybe, right, with a better regulation, it will also be one of those financial instruments. It's a matter of many countries coming together. Like we keep hearing in G20, there will be some kind of a regulations around cryptos and so on. So I think this is evolving landscape we have seen, and it's all happening because of internet. This, now look at, because of internet these logos vanished. Imagine these logos were one of those best logos, but the kind of a internet penetration and kind of a smartphone penetration and the kind of a vision, right, which these logos were carrying for their customers, while these logos were the best logos, these logos doesn't exist today, right? Our logos or methodologies, although if there are, I think you will not see newspapers or some of those icons or logos in the down the line 5 to 6 years. Now look at these logos. While we say these logos are the best logos for today, including WhatsApp, Netflix, and so on, never know, right? So what another technology comes as a part of, example, AI or blockchain or something else. I think if these logos doesn't accept or doesn't do any kind of innovations research, I think these logos also will be vanished. While we say they have a clear vision and pace, let's find out, right? It's happening because of huge adoption of internet worldwide. Almost 5.4 billion people have a internet. There are different generations. Every generation uses internet for various needs, right? So or you can look at how organizations are looking forward with a larger view to become advanced digital or extreme digital today. Or if you go back in 90s, the way we used to open bank account on paper, or the way we used to open a lending account on paper, which is typically around non-digital. But slowly you have seen examples like Kotak 811. We have seen examples of DBS or many more other fintech brands, so called Jupiter or Flipkarts or Grow. They are primarily more or less around advanced digital, where they have a better customer onboarding journey on API banking or existing big data kind of ecosystem. But the backend ecosystems which are still making them a bit operational, right? While we say we have omni-channel architecture, while we say we are on smartphones, we are delivering so many services. Look at those same customer who keep calling to contact center. Look at those same customer who says that we are unhappy with your services. Look at those employees who keep creeping around. There is an operational effort needed in the back end, in the data center or in operational needs and so on. I think the vision towards extreme digital is something like customer enters in your insurance branch, or customer enters on a make my trip, or customers enters in a bank branch, and the service provider or a bank will come to know who has entered in their territory. And if he has entered in the territory with a green health situation or a orange, like whether he has a better financial health or a bad financial health, and what is that as a company, as a VSFA company, you can do for them. I think extreme digital is something like entering in a Amazon Go shopping mall and come out with all of your shopping and your payment has happened. I think it's kind of a dream. At least in India, we have not seen this kind of innovation in day-to-day banking, but we have seen experiments done by SBI or some banks to do these kind of experiments. Like somebody has entered in a bank branch, they know who has entered, what is his financial health, and so on. Now there are innovations keeps happening because of various types of interfaces we see. We have seen keyboard mouse, we were happy with that. We have seen today swipe, talk, or touch today. But tomorrow's intuitive interactions, are you ready for that? Are you ready for just some kind of a gesture banking or a mood based interactions, right? You may say this will not come, then go back in 1995 what you have imagined for, that will not come, right? And which is already available in form of a touch swipe or a talk. We have seen examples like Alexas, we have seen examples series, you have seen example how intuitive screens are there on smartphones. So typically human tendency is that remove frictions. How can we do better job in the front end, as well as how can we do better job in the back end with a less of operation, right? So like we have seen, these are those impact things. The banks have evolved this way, right? I think in a typical banking was always there since so many years. In Indian context, we have seen since 93 till now, we have seen a lot of modernization of banking, right? India's first ATM back in 1907 by HSBC, and modern ATM in 2002 by ICCI. And there are many more innovations has happened in so-called in traditional banking, which they have moved onto the digital banking. So today digital banking is well supported by mobile, open banking, big data, cloud coming. So question comes in our mind as an insurance company or a bank, what next? So when we say what next, we always look at our operations, we always look at customer experience, we always look at our business model. Then we start looking at technology like RPA, where we see how we can automate, or AI, how we can automate, where we start looking at various operational efforts where we are doing it for customer onboarding, customer servicing, so on. Then we start looking at voice or blockchain will talk in detail. So today we are in the era of between digital and intelligent banking. Many banks, insurance company must have adopted RPA or AI, but largely how do we be part of a cognitive world or cognitive city? How do we part of a edge IoT or metaverse or a blockchain? We had to do a lot in that era, right? So when we always challenge ourselves, is it really going to happen? Always look back what was not there 30 years before, and always challenge yourself what is going to come in the next 20, 30 years, right? So likewise, the your complete branch model is moved out of the bank branches. Now everything is available with the help of partner ecosystems. Like if you see earlier bank branch is, now it is completely open ecosystem, which is available in hotels, entertainments, and governments, utilities, telecoms. Everywhere you can have a financial transaction backed by some open APIs or open ecosystems. So I think while we say we are on internet path, we have done so much of work. During COVID, we did so many projects, digital transformation. We should be so happy, and we should say, wow, we should be happy enough, right? But keep asking this question to yourself, that are you happy, right? Are you really making better job out of these technologies? So look at, right? So financial inclusion challenges across the world, these fraudulent challenges, fake passport, fake certificates, fake pan cards, fake people, right? Fake identities. While you see cases like Niro Modi or Malyas, right? These are those. How do we identify these are the trustworthy customers? Challenges around putting these billboards. This property belongs to me. Any accident happens, the typical process of a claim, and typically the whole operational efforts to do survey, to do document creation, and the process of 3 to 7 days to do the insurance claim, or challenges around unregulated entities coming in doing financial inclusion, or frauds around twitters or social media or social engineering, wherein you have seen many more guys victim, frauds around OTPs, frauds around SMSs. You usually receive a lot of SMSs these days, go for this loan, or moreover some of these are fraudulent links, right? So I think whenever you use your card or any identity data on the internet, you are not sure that your data is not tracked. It is always tracked. That's how the internet is being designed, developed. That's how there are gaps we could see. That's how those gaps has helped fraudulent people to get into Cosmos, or to get into some Bangladesh bank, or to do some kind of a 32 million debit card attacks. And there are many more such examples. We are always victim around these frauds, right? Apart from these frauds, there are n number of operations we do during cross border payment, trade finance, or because this is how we define these systems, with a man in between, and with the multiple ecosystems or multiple agencies in between. So the challenge today is a need of a trust on a both side. People like us who are consumer customers always want to say and see whether the government is good, whether that bank is good, whether this hospital is really is good. And on the other side, this bank government want to know whether his customer is going to give back the money, whether the customer is not going to do any fraud claims in the insurance process. And on the both the side, right, when you talk about this trust, we look at the solutions in today's era, right? And that's how we say, let's bring on some kind of a better technology aspect. So today, in a nutshell, where we are in the era where we pay some amount to Mastercard, Visa, trust agencies, right? Ask those Ola, Uber drivers how much they pay back to these entities. We are in the era of Jam Trinity. We are in the era of adoption of India Stack or fintech collaborations. We are in the era where big techs are making business out of your business, right? They are selling banking services, insurance services, so on. We are in the era of industry 4.0, where we have to serve our customers. We are in the era of better regulators who are having better guidelines to follow for banking and financial instruments industry. And as well as we are in the era where we need to take care of a sustainability aspect. So while these are the challenges, and primarily this challenge boils down to banks, where around to have a better customer simplicity, removal of the bad loans. So any innovation, any new project in your company, it or in your bank or insurance, it is all around these kind of problem statements. How can I better security reporting? How can I do better data privacy? How can I adopt a new interfaces? How can I do interbank connectors between bank one to bank to another bank? How can I do the better record keeping for the loan files and many more other files, right? How can I do better fraud reporting? How can I track fraudulent customer on the spot rather than waiting for 45 days, right? How can I create a bank account instantaneously within a few minutes, the way we have seen? But how can I do better banking? The KYC, which was always done with the one bank, can I not be utilized with the other bank, right? So there are so many problem statements today. In spite, we have adopted internet. And look at one of these problem statement, which is around how can I have better settlement cycles in any typical banking transaction. So called, say example, some of our friends who are listening us, they must have done many of their financial transactions, right? So they must have bought something on a shopper stop, or they must have done some transaction on Flipkarts and so on, right? So I think while these transactions happens in this whole architecture, transaction goes from e-commerce site, or that POS, or that shopper stops to a company or acquiring bank, where these transactions are routed to a trusted agency, so called Mastercard, Visa, or NPCI, based upon what type of a network we are working with. And after that, same transaction will go back to your bank card, right? The card which you have, or a UPI ID which you have, relevant to banking ecosystem, so called card management system, transaction switch. And ultimately transaction will reach to the core banking for your account, and it happens within a few seconds, right? In case of a UPI, it happens in 7 to 8 seconds, or in case of a POS, sometimes 20 to 35 seconds. And imagine so much of hardware infrastructure we have built in here. An additional process, so called reconciliation settlement, where your merchant, wherein you are doing transaction, he will get that money next day. Imagine, even if UPI transaction happens instantly for you, the merchant where you are doing transaction, phone pay, Google Pay, or your any of those app, make my trips, and they get money next day. Why? Because this is how we have created it on internet, right? And moreover, if your transaction doesn't go through, what happens? Say example on IRCTC, or some of those heavy websites, right? If your transaction doesn't go through, you'll call to contact center, this has happened, oh, what should I do? They will say wait for 1 day, they will say wait for 4 days. Imagine if you have only 4,000 amount in your account, and your transaction doesn't go through for your children fee. What is that you will do, right? You will do n number of calls to those bankers, and bankers will say you have to wait. I think we have seen this kind of a jugglery in all kind of a banking, say UPI, IMPS, NEFT, RTGS, ATM, POS, APS, and everywhere. Now imagine if I create ecosystem like this. Now this ecosystem is like a transaction happens seamlessly the way you are doing on a shopper stop and other channels. But in the back end, the money will be received by those make my trip or merchant on the spot. They don't have to wait for a process called as a reconciliation and settlement. They don't have to wait for any dispute. Customer don't have to call because transaction will always happen 100%. Now, will you not go for this kind of ecosystem? Yes, you will go for. This is a blockchain based ecosystem. It will happen. It is a safe, secure. Forget about the performance, etc. Part for later on discussion. But today, blockchain gives lot of challenge to this kind of ecosystem where we have created since so many years together, right? So blockchain comes and says, let us improve productivity. Let's allow radically simplify collaboration between banks. Let us remove or reduce chain of intermediate, so-called Mastercard, Visa, NPCI, or those Ola, Ubers. Let us create trust between participants and the ecosystem, trust between customer and a trust between government, the one which I was talking, right? So this kind of a trust, right? I think that's the concept behind blockchain is all about. And let us produce resource saving models, and it's happening, right? While I say blockchain has come in form of some bitcoin back in 2009, which you can see here, but since then there are more than 18,000 blockchain based cryptocurrencies, with some business models, some fraudulent business models, some successful business models. But the technology behind blockchain comes with the various platforms, like the way we have Unix, Microsoft, or databases, various types of databases like Oracle and so on. In a blockchain technology, there are Ethereums, there are Hyperledgers, there are R3, kind of various platforms, and these platforms are there based upon use case to use case base, right? Use case could be only for cryptocurrencies, go for some Ethereum, Bitcoin, and so on. Use case for healthcare, use case for insurance company, use case for like-minded banks could be something like R3 or Hyperledger, which is enterprise blockchain. So now, based upon use case, there are a lot of blockchain platforms are there, and these blockchain platforms are backed by some kind of a phenomena called smart contract or a decentralized databases, so-called IPFS. But in all these blockchains, which is typically layer one or layer zero blockchains, they are having some challenges around performance. They are having challenges around security. So that is why we come up with some kind of a layer 2 solutions on top of this layer 1 Ethereums or layer 1 R3. Like Polygon comes and says that I will solve the problem of fees. I will solve the problem of scalability. I will make blockchain more interoperable, more scalable, and these layer 2 solutions are coming. So while we have seen, or while we are saying blockchain is still there since last 10 plus years, but in the last 4 to 5 years, there is huge and tremendous innovations and research is happening, and these ecosystems, so-called Ethereum, Bitcoins, and they are going ahead with a lot of innovations and research, considering better security, better compliance, better interoperability, because one blockchain has to talk with another blockchain in case of an enterprise blockchain between HDFC and ICICI, or it has to be more secure and more scalable. Imagine tomorrow we want to build CBDC, it should be more scalable, right? It should be more scalable than the UPI the way we see today, right? So I think while we talk about this foundational technology, still you will see next 2 3 years you will see lot of innovations around these technologies. Maybe after 7 8 years we will not talk about blockchain the way we don't talk about internet, right? We talk about various use cases on top of internet. You will not talk about blockchain, we'll talk about various use cases which will drive a lot of our business models, right? So coming back, blockchain is there, fine, but blockchain is not a solution, okay? It has to work cohesively with the ecosystem, other technology which are part of industry 4.0. It has to work cohesively with the API, IoT, OCR, or big data, or AI, or in the underneath with the digital identity, and it has to work cohesively deployed on a cloud computing. So blockchain is not the answer for all. It has to cohesively work with many other technologies to provide a right use cases. So today, in a nutshell, where we are slowly driving our journey from internet 2 to internet 3, where we are utilizing today cloud or social media, mobile. Tomorrow we will utilize, apart from cloud, social media, we'll always utilize IoTs or blockchains and AI and so on and so forth. So primarily what blockchain provides, hypothetically as a concept, single source of a truth, data security, and anything written in the blockchain database cannot be tampered. Anything written in a blockchain database, it cannot be tampered, as well as it is immutable, right? Moreover the thing is like how it works. I'll just get to that particular slide. So now, while we heard this, right, initially humans will be banking with no banks. Now look at this example. Now one of these example, today we go to the shopping mall, and there is a something which is written on the various packets or various products you buy. You always see where, when, and from where this is being manufactured. Typically in the medical store, or typically in the food store, you will see, is it expired, okay, when it was created. And there is no trace and proof that a particular label which is being put on that bottle, on that particular tablet sachet, is it really true. Now the way study says, in Indian there are at least 20% medicines are fraud. What to do with that, right? So how do we really trace from which source these medicines are being created, or from which source this particular oil has come. Imagine this digital transformation is happened, where you are able to see from this palm oil plantation to the oil mills, to the refineries, to the manufacturer, to retail outlets. This took 30 days or maybe more than that. Now the barcode which is being put onto this packet, and if you scan that barcode, it will tell you the complete trace in this whole ecosystem. Why? Because we will create a blockchain or a chain of all the like-minded parties. Party is a palm oil refinery, party is a oil mill, party is a manufacturer and retail outlets, and everybody scans and puts the record into the blockchain, which is immutable. Nobody can tamper it. And look at the customer at the end of a day will be able to know exact timestamp, when it was being created, when it was in a refineries, when it was in a manufacturer, and they will come to know, yes, it is really a true product, right? That's one of those use case. Or IBM has done this kind of a use case where you can scan at the end of a delivery at your home. They will tell you from where these oranges have come, right? From the farm to fork, right? How long it took, considering this whole aspect. Now tomorrow's cars, right, will be backed by, even today some of these cars are backed by a lot of IoT gadgets, right? And at the end of a day, looking at these IoT gadgets, and imagine some accident happened to this car. And right today, the way we see lot of a manual process around surveillance process, lot of a operational track to really process that claim. Sometimes some fraud happens, the accident could be calculated at 2000 rupees, but just to claim more, people what they do extra damages, extra things, and they claim instead of 2000 20,000 rupees. Moreover, people sitting in between also want something or the thing, right? So I think, imagine the car itself will, this IoT car itself will say, oh wow, my damage is a 2000 rupees, and the car manufacturer till car owner, right? So and the insurance company, all of them are on the same chain, provided this the guy who is claiming this insurance, he get the insurance on the spot. The way we order food on the spot today, I never know, right? You can't imagine this may happen, right? The sensors in the car will pick up the crash and enforce the impact, and everything can be done instantaneously. So thanks to blockchain, this could be happen. Is it happening today? May not be, right? But the car embedded with the sensors can detect every other thing, including the damage wherever it is happen, and the user accepts on the smart contract, yes, I can see this much damage, and the your Aadhaar link bank account will be having that money. So imagine, is it going to possible? Yeah, it's maybe possible, right? Look at your current ledger system. In this ledger system, example, in 2020 January, some of our friend has opened a bank account. One car is being got manufactured in January 2020, and it is available for the sale, and it is a sold to owner one who has a bank account which is open in 2020. Now car loan is a process, insurance is process, car is stolen by mistake or by hook or crook, car is stolen in May 2020. Now this guy has went to the police station and filed the FIR in May. And moreover, whole process, it say example, the claim is received in August 2020. Now there are more or less 12 13 events out here, and look at various actors or various entities involved. Your bank account, bank, manufacturer of the car, insurance company, car is stolen, the police station, RTO, right, insurance company again. And all of these are different entities, and at these different entities, they have their own ledger system, or they have their own system where they will record this complaint, or where they will record this operation for the same customer. Imagine if we bring the ledgers of all these entities like this in the same chain, where starting from January 2020 till August 2020, every transaction is recorded in the same blockchain. Moreover, the transaction which has happened, bank account is opened in 2020, it is, and the relevant hash or relevant data is again mentioned in the another transaction wherein the customer has bought the car, right? Bought the car in March 2020. So every transaction in a common ledger at various units, it is available, and everybody knows what is happening to a particular whole car journey, right? Now that is all about blockchain all about, where we will be do away with a lot of operations in this kind of a journey, right? So primarily when you look at traditional to decentralized app, so decentralized are backed by blockchain will have a smart contract instead of API, the one which we have today, and it will have a blockchain based database or instead of database, right? So, RDBMS. So it's the same architecture, and this architecture looks like a little bit different, with a lot of actors coming or entities coming into the picture. Now if you categorize blockchains, right, blockchain could be three types. It could be a blockchain 1.0, which is typically around cryptocurrencies, right? Blockchain 2.0 is something we are more interested around, right? So what is blockchain 2.0? Blockchain 2.0 is this insurance use case. Blockchain 2.0 is something around centralized KYC coming on blockchain. It's around taking India stack on a blockchain, or many other use cases like CBDC or cross-border payment. Right? Blockchain 2.0 is all about all the enterprise use cases. 3.0 is something which is coming up. It could be combination of IoT devices, quantum computing. These are all the future use cases, right? So typically, how blockchain works? Blockchain comprise of many nodes. Now these nodes could be at a node at a HDFC bank, node at a insurance company, and so on, for a particular use case. For a particular use case, these nodes will be there at all the entities. Example, let's take about a payment use case. Node will be at RBI, node will be at one bank, node will be at NPCI. Now all these nodes will have a same data. Example, a transaction happens at 10 o'clock. So from 10 to 10, the way this blockchain will be defined, all the transactions will be written in one block, and this block will be replicated to all the like-minded actors. Now in case of enterprise use cases, we don't need mining. In case of a public use cases, we need mining, right? And when this consensus happens, whether this is a right transaction which can be accepted at all nodes, the transaction will be written inside the distributed databases at once to all the nodes. So blockchain works in this principle, where hashing, and there are many more concepts are there. So I'll touch upon some concepts in the next 20 seconds. What is hashing? So hashing is something like, say example, today you are sending one email to your friend. So that friend will accept your email, right? Why? Because that's how we have created this TCP/IP network on a SMTP protocol. Now tomorrow, if you send 1 lakh email to your friend, will that network will accept the mails, all those 1 lakh emails? Yes, because this is how it is created. But what will happen to the whole network? It will go down. Now what is hashing? Hashing is all about, instead of sending all that data over a transaction, let's send a hash of that email. Example, the mail could be PPT, mail could be big document, mail could be more MBs, 2 MBs, and so on. But hash of any of those data will be into some very minuscule data, which could be 128-bit characters and so on. So what are we saying? Let's hash source data and send the source data to the destination. Now this hash of the source data has to be sent to the source destination. Can you send that data in today's era? Yes, you can send. But in the era of a blockchain, what we'll do, we will send hash of a source data only if the source data will have a initial four characters as a four zeros. So your 128-bit character should have a four zeros, and that will be done by adding some additional bit or additional data to your email. So the email has a data, and you are adding additional data, and the combination of both the hashes should have a four zeros in beginning. And until that comes as a four zeros, it will not allow to send that email. Once that four zeros will come, that mail will be sent. What does it mean? That transaction will be written in the blockchain. That whole process of calculation of those four zeros is called as a mining, and the consensus decides whether to write it in our network or not. That's a little bit complex, but this is how blockchain works. Now, in a nutshell, what type of blockchains we have? A public blockchains which are available to all, the permission or a private blockchain which is typically the people like or a companies like us. Likewise, this is a public blockchain like bitcoins, ethereum, and this is a private to us. One of the example of a private blockchain is that let us utilize and open a bank account in a DCB bank. Now, this account, this bank account and relevant KYC, which is coming from video KYC, DigiLocker, Aadhaar, or CKYC, let us write those hash, right, of data in the blockchain node of a DCB bank. As you write, it is immediately propagated to other banks. What does it mean? It takes 5,000 to 10,000 rupees to open a bank account today because of operational process. Now that amount will be saved by HDFC Bank. That amount will be saved by ICC Bank because the KYC is available on the same chain. Imagine tomorrow another insurance company wants to be part of the same chain. They also will be saved. They will also save. Or imagine another CV backed by company is a part of the same customer's KYC. That's how we can save lot of operational efforts if we bring like-minded companies, banks, insurance company on the same chain, right? That's a concept all about from one use case, right? Now there could be many more use case, right? So like in a banking context, SBI did, ICICI did some bank chain, S Bank did some use case along for a supply chain with Bajaj Electrical, ICICI did with Emirates NBD. There was the Infosys trade for a trade finance is done. EBIC is a new company found by 18 banks, including Bob, Union Bank, ICICI, many more who are part of a Finacle. Income tax department did a use case with the TCB Kotak for Form 15GS, Form 26AS. Now all these use cases are multi-bank use cases, right? Like decentralized KYC is done is a Ministry of Electronics and Telecommunication along with IDRBT they are doing. Trade chain, which is Axis Bank did. Recently, Federal Bank did some use case with some company called Insurtech and RBI Innovation Hub. So I think there are a lot of things that are happening in a banking context. But if you have to identify use case for insurance for your process, use this framework where you can see, ask this question to your processes, whether your process have multiple participants involved and you need transparency. Yes, go for blockchain. Whether you require trust among participants, there are multiple processes to be written and there is a risk of fraudulent transaction, go for blockchain. Whether you need data security, data sharing and API centralized, go for blockchain. Are there any higher intermediary fees, higher latency, lack of trust, go for blockchain. So if you utilize this framework for any of your process, bring on those 10 12 processes which are suitable for blockchain. Choose one of them smaller use case and work something around those use case, right? So in a banking context, I have identified many more use case like cross border payment, decentralized KYC, CBDC, NFT, decentralized finance, right? Next level Aadhaar, right? Trade finance, secure open banking between fintech and banks, clearing and settlement, reporting of fraud from one bank to another bank. Today it takes 40-45 days. With the blockchain it will be reduced down to the 1 or 2 days, right? Likewise, there are many use cases: AML, radar registry, invoice discounting, and branch operations, third party insurance issuance we did at DCB along with Aditya Birla, right? Where the insurance policy which is bought at a bank, right? Once we receive amount in the core banking and a smart contract executes, calls the API of Aditya Birla, and immediately we issue the policy to the our policy holder. Earlier it used to take 3-4 days, including contact center operations and branch operation. I think that's how we saved a lot of operational efforts, right? Smart reconciliation, ATM cash handling, and in the insurance also, right? You can identify many use case. You can have a many more use case repository, create a unique winning team the way it is available with the banking regulators. Identify lot of use case, work on with some use case, identify which platform to go ahead. There is a science, there is a framework, there is a method to choose a particular blockchain platform based upon the scalability, based upon the identity access, based upon the security requirement based upon what type of a use case you have. Is it a banking or a public? These are prominent blockchain platforms, so-called R3, Hyperledger, Ethereum's, EOS, Hydra, Hashgraph, and so on, right? So you can choose any of those them and see, for example, for public platform, you can use Stellar, Ethereum. At a Blockstack where I work, we are utilizing Stellar for our pay circle. Happy to take any calls or any queries post this session offline, right? So there are other platforms like Ripple is being utilized for a cross-border payment. R3 is being utilized for a CBDC by some countries. Recently, R3 being chosen by UAE government. Hyperledger, most of 80% implementation of a central bank digital currency worldwide are typically backed by Hyperledger, followed by R3 or Ethereum Stellar, right? So there is a science, right? Which platform to use, what type of blockchain you require, what languages you know for a coding, how popular is the blockchain platform, how much is the community support, right? What blockchain consensus protocol they follow, and that consensus protocol will prove whether it is a secure, scalable, and so on, right? So I think based upon this question answer you can choose, but ultimately as a banker, as a insurer, as a BFSI entity, you should have a right maturity model. Your maturity model of a use case, you always weight it, right, with the security testing followed by internal audit. Similarly, look at your internal auditor should see any of these implementation considering these 8 aspects: security, privacy, change management, scalability, interoperability, data management, how data is being managed, authorization and the provisioning of management, and access to the users, your users. So this gives a lot of maturity. Let me look at our time, or if there are any questions in the CBDC is more effective. Hi Prasanna, great to hear you. Wow, is journey future very exclusive? Here the transactions. Where these transaction frauds manipulate free? How do we ensure? I didn't understood this question. CBDC started effective. Can bank has a own app? Yeah, I think answer for this one. Yeah, CBDC started effective. Banks will have their own app for sure, but the way we have invested, or the way we have done lot of investment on of our UPI kind of or any of those mobile banking app, will make sure that we will utilize the same infrastructure backed by the CBDC kind of ecosystem, rather than reinventing the whole wheel, because we have done lot of investment around adoption of UPI, right? So maybe today's CBDC is backed by UPI, wherein the money is pulling into the those CBDC wallet through UPI. Tomorrow it will be through credit cards. Tomorrow it will be through accounts, direct internet accounts, and so on. That's how it's going to be tomorrow. CBDC retail, CBDC primarily. Wholesale CBDC is between bank to bank and government to government, right? So it has its own traction to look at. So continuing furthermore, I think we spoke about today's traditional KYC will become digital KYC backed by eKYC, or there are many more other norms we have seen. Decentralized KYC is something which we are dreaming for. But tomorrow's KYC will be sovereign KYC, right? What is sovereign KYC? It's just something which is available in your hand. The way you have a CBDC wallet in your hand, tomorrow you will carry your own KYC and you will decide whether to give access for the KYC to this bank or insurance company, and how long that access should be given, 1 year, 2 year, as long as you have a bank account or account with that insurance company. Moreover, today if you see Aadhaar, right, the Aadhaar brings on those all those 14 plus parameters. Never know why bank need all those parameters, right? So you can control how many parameters, where only name, address, where do you stay, your gender, only to be shared. That's called as a fractional KYC, right? Only that much to be shared with the bank, and that also you will decide for how long. So never know, you will have an interoperable bank accounts, right? Today you want to be bank with the ABC bank, tomorrow another bank is provided better service, you can always switch back there, right? I think that's how you will see many more tractions around decentralized KYC, cross border payments, right? Or you talk about the e-rupee infrastructure on blockchain, digital identity, consent mechanism, whether I have to utilize Aadhaar or not, record keeping, secure open banking, reporting of frauds, and there are many more use cases we can talk about, right, in the ecosystem, right? So primarily lot of things at a block stack. We look at blockchain here. Blockchain is one of the part of ecosystem, where you will see it's a part of intelligence ecosystem with the help of AI ML, but it has to cohesively work with the other integration aspects or interface aspects, mobile apps or metaverse or wearables or any other thing, right? I think that's how we look at this whole ecosystem for any blockchain based company. These are those development tools they should know around development or programming languages like Go, Solidity, Java, JavaScript, DevOps tools. I think AWS, and these days blockchain as a service, AWS or Microsoft Azure, Oracle, they provide complete stack of all these technologies onto their development environment. You don't have to worry about how can I deploy. At a Blockstack, we help to deploy complete node. We help to complete use case, right? We support all of these Ethereum, Stellars, which are primarily matured blockchains, Algorand and Polygon, Binance, and many. We have our own blockchain network too, called as a Diamond Net, where our payment app like PayPal or like PhonePe, it is live in US, and it is a completely on blockchain where settlement reconciliation happens on the spot, payout to the merchant happens on the spot, considering digital assets, right? So I think that's how we look at. I think as a learning, you should based upon your skill, based upon if you are a business guy or a technology guy, you should know blockchain's basics, how to identify use cases. You should know how you should implement blockchain kind of a thing in your organization with smaller use cases, right? As a developer, you should know some of those architectures of blockchain. You should know which are those blockchain prominent platforms. How do you design blockchain use cases, right? And what are the fundamentals of cryptography? I think more or less it's another technology just like internet. Don't worry about is it complicated. It's not so complicated. It's very easy. The way we always see, right? We keep innovating for more use cases in our banking finance. So I think similarly way, I think can you show the e-rupee slide now? Okay, yeah, I'll show. So e-rupee slide is all about how can we implement blockchain part for instant settlement and so on, right? So likewise, right? So how can we issue the CBDCs? How can I distribute the CBDC? Some use cases in India is like a DBT, direct benefit transfer to the farmers. Another use case could be those farmers who sits in a Punjab, right, where we have a ecosystem like Pangrain, where we use the Rupee card, but the Rupee card being utilized, it's again backed by a same reconciliation settlement. If you have to do away with let's issue the sugar or cane coin or a wheat coin, kind of tokens backed by utility, and utility here is a wheat, utility here is a sugar cane, right? I think then we'll be do away with these kind of things. I think a CBDC will be there, but more or less CBDC will have its own use cases, because at the end, UPI kind of ecosystem is good for Indian context as far as smartphones are concerned. But the feature phones, offline payments, CBDC is as good as a paper money in a digital version. It has to behave work the way paper money works in our pocket, right? I think look at those countries where they don't have UPI Aadhaar, right? How they will create CBDC? That's a traction. While India is sitting on good railroads, it's very important for other countries to have those railroads. Then they are going to build a CBDC kind of infrastructures and so on. So I think primarily, while I talk about blockchains, so a blockchain as a service where infra, right? How to deploy infra, how to do those blockchain audits, the custodial services. How do we is going to be another business model for banks, where at a Blockstack we have created complete engine to store those tokens securely. Blockchain analytics services is something having a reports on top of a blockchain databases, right? NFT is a non-fungible token, which is another use case where we have seen how poems of Amitabh Bachchan got sold in millions. So I think it's a different mechanisms like non-fungible tokens or fungible tokens, like enterprise blockchains, dApps, decentralized finance, decentralized autonomous organization, where companies like Samsung or manufacturing companies use these DAOs within a to follow a workflow. So there is a tag between one department to another department. Your final product is created, but before creating that final product, it goes with the multiple departments. So the traction or handshake from one department to another department, the traction or securing those the prototypes and product design from one department to another department, everything is tracked under blockchain. So I think that's how DAOs can be utilized in a blockchain context. Yeah. So I think in a nutshell, see, today we are in 2.0. Tomorrow it's going to be 3.0 with the AR, VR, or a blockchain, or AI, with the rise of a metaverse. Both the things will prevail at least for 10, 12 years, Web 2 and Web 3. People may say Web 3 is coming, let's do away. I think the way we have to do lot of financial inclusion, lot of services around mobility. I think mobile will be always a form factor for a longer period, but the same manufacturers of mobiles will create different form factors in form of a virtual reality, augmented reality, and so on. Different kind of interfaces will come for sure. But I think the way we will move from 5G to 6G, or from intelligent banking to autonomous banking, the customer will expect a lot. Customer will expect a lot and on the spot, and that too with the more trust and more intelligence. That's why these all technologies will cohesively work hand in hand to do this kind of innovation. So I think to adapt a blockchain, we should have a right people, right governance. We should identify which process to work upon, right? What is the governance around that? Use those technologies like blockchains, AI together. Look at the regulation aspect. Look at which are the partner startups will help you. Look at the right use cases internally or externally for your customers. I think if you follow these guidelines, so definitely it's not very difficult to adopt a blockchain kind of technology. Yeah. So I think last but not the least, it's always good to ideate, collaborate, keep on collaborating, implement with a better regulation. So good to be here. Happy to take some questions around our discussion today. But to be frank, what I've covered, impact of blockchain on largely considering use cases. There is a lot to do around blockchain. If you go back and see this slide which talk about business blockchain, evolving landscape, right? So what are those different cryptocurrencies? What is tokenization? What is DAO? What is a smart contract? Right? So there are various platforms. It's a very tricky situation to choose a platform, because once you write in a blockchain, you cannot roll back. How do you adopt a blockchain with a better framework? How do we identify use cases? Right? So I think security aspects, policy framework aspects. So I think everything goes hand in hand. It's a great opportunity at a insurance tech association, right, to do this kind of a handholding to the multiple insurance company come together and hold or build some smaller use case. Start with small. I always say that learn with the small and earn with the big use cases, right? And it's very easy. We'll not talk about the blockchain after 7 8 years. It all depends upon how much we research, how much we adopt, how much we do the education around the blockchain today to have a better industry adoption, right? So that is it from my side as on today. Yeah. So if there are any questions, we can, how can we use these technologies in the wealth management business and cost involved? I think the basically you need to see the processes. Wealth management could be a bigger area, right? There are many processes for customer onboarding where you can use blockchain. There could be some operational process here where you can use blockchain to do away to those operations, like with the help of a smart contracts and so on. Some of those areas, like creation of a token for offerings or engagement patterns, right? So that's how some foreign entities are doing, right? So I think that way we can see how it can be utilized in a well. In insurance, so there are a lot of insurance with third party insurances, or while you do this insurance, there are multiple stakeholders are involved. Crop insurance, how can we really do the crop insurance with the proper environmental conditions? Or there could be health insurance and the process around health insurance. I think moreover you'll see more than two stakeholders wherever you see more than two parties where you need to do some kind of a trust, I think you should adopt blockchain. So I'm not saying there are straightforward use cases in every industry, but be cautious because today blockchain is so costly. Maybe after 2 years it may not be that costly, but to learn on it's a bit costly. But to if you really have a right designer architect, you can really do better job on the cost also. So there was one question: how where these transaction fraud and manipulation free? How do you ensure? Yeah, I think there are methods, right? So I think one thing which I was talking, if a fraud has already happened, right? So there is a process of reporting of this fraud to RBI, and once this data is accumulated at RBI, this RBI opens up this fraudulent data to other banks so that the same customer should not be onboarded, right? So same customer should not get loan, or so I think this process today it takes 40-45 days for moving data from a bank where fraud has happened and moving this fraud data to the central fraud registry. Tomorrow you bring it on blockchain, it will be 1 or 2 days, so that this fraudulent customer moving around can be tackled immediately rather than he opens bank account or lending out everywhere. Moreover, blockchain comes with that attention that it will not allow to have a fraud itself. Let's forget about reporting a fraud. The way it is designed defined, frauds will be minimized heavily. Moreover, the controls which you have created since last 7 8 years, typically around 2FA, OTP, and there are many more controls we created because those controls are created based upon current designs, current Web2 designs, current client server design. Blockchain is a decentralized, so your more or less 30 to 40% controls will be vanished tomorrow. So there is a less of a fraud appearing situation at least. Yeah.
So thanks a lot, Prasanna, for sharing your wealth of knowledge, and it was a very engaging presentation, and we're deeply grateful for your contribution. I want to express my gratitude to all who have been part of this very insightful seminar on blockchain's potential role in finance. And a very special thank you to Anu Ghosh, who played a very instrumental role in facilitating Prasanna's participation in our event.
Yes.
And a very heartfelt thanks to Shobha as well, and the entire organizing team for for the IIA. Tireless efforts behind the scenes, and they've provided us with a completely seamless experience. And a very big thanks to all the attendees for waiting. When there was a small delay from our side. Thanks for your active participation and your curious questions. So once again, thank you all, and until we meet again in our next seminar.
Yeah, thank you, Sunil and Anu ma'am and Shobha ma'am for providing this me opportunity. I think questions coming in from the chat box will always help me to look at those questions again, and look forward to collaborate with you again and again for this wonderful journey of a blockchain. Yeah.